April 7, 2025. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. This is what the chart looked like today. It was a very, very high volume, very volatile day today. I mean, it kind of followed from last week. Friday was also a very high volume, high volatility day, and the markets just keep selling off right now. I think it's due, well, everybody knows it's due to the tariffs and the tariff escalation that's happening. These are kind of all the previous days. It's just kind of these big, big drops down. This is when Trump announced the tariffs. The next day in the overnight, it dropped pretty much from 5,700, 5,771, all the way down to a low of 5,481. So it's about a 300-point drop. Opens in the market, keeps drifting down. This is Friday last week. So it closed here at 54.32, and then it opens again in the morning at 52.94. So it's another pretty much 130-point drop. Then it continues dropping throughout the day all the way down to here. And you can see from Friday to today, it was kind of crazy what was happening. There was actually no economic data that was scheduled on Forex Factory, but there were a lot of comments made by Trump about tariffs. A lot of his administration, a lot of his representatives are coming out saying things. There was this gigantic recovery rally where I think this is the news that it was said that sources, whatever even that means, was saying that Trump was considering halting all tariffs except for China for 90 days. It caused this big spike up. But then another source, like whatever even that means, because you can't really trust the news these days, was saying that, okay, that initial announcement about Trump pausing things for 90 days is completely a rumor, nothing real. And it kind of sold off again. And then it just kind of got very, very choppy. It was, for me, I consider it like it was a very difficult day to trade for two reasons. One, it was super volatile. Candles were changing and flushing and rallying really quickly. And if you look at from the pre-market all the way to right before the open, it shows about 400, 409, 410 bars. Now, if you have a 1 minute chart on a typical 6 hour day, there's only 390 bars because 1 minute for 6.5 hours of regular trading. And if you look at the regular trading hours, starting from about 6:30 Pacific Standard all the way to the close at 1 p.m. Pacific Standard or 4 p.m. Eastern Standard, you can see there's 925, 24 bars. And as I said, on a 1 minute chart, you're only going to get 6 hours and 30 minutes. So that would equate to 390 bars. So you can already tell it's more than double, almost triple the number of bars that happened. Plus, the other difficulty was these bars are gigantic. The ATR all day was pretty much hovering in the double digits. So even if you're trying to get a trade, if you entered and you didn't keep your stops really wide, then you could easily get stopped out during the formation and the completion of that bar. Or if you did keep it extra wide and you're wrong, you're going to take on this huge amount of risk. So this is kind of how I drew up the charts today, but it was like mentally taxing in its own way trying to figure all this out because it was just chopping up and down. And this is where I took my trades. I actually took a total of 2 trades and I was profitable on both. The first one was a little riskier. The second one's a little bit better. But after that, I kind of decided like I don't want to risk anymore today because as I said, the candles were huge. So in order to not get stopped out, you'd have to keep your stop losses like 10 points, easily 10 points, or, you know, uh, if you kept it tighter, then there's a high likelihood you get stopped out. So this is the pre-market. It was just, I mean, today you could probably find a bunch of second entries, but the risk is increased by the size of these candles. So I'm just going to go pretty much because there's a lot of price action today. I'm not going to go through the whole chart like I usually do. I'm just going to go through where I saw my trades and point out a few things that I noticed. So the pre-market, as I said, this is easily a whole day of trading right here in regular trading hours. It looks like it's range bound, but it had this huge drop from the close from Friday. It's like 51.08. It dropped to a low of 48.32. So this is already like 300, almost 300-point drop. Actually, it is more than 300-point drop essentially. And it was like, or actually 200-point drop. It was 250-point drop. It's insane. pushes down, it opens, and I thought there was this channel moving down. And as I said, if you look, you can find a bunch of second entries, a lot of aggressive entries. And even if you see this candle, which looks tiny, right? This is a 5.75 candle. And as you progress throughout the day, these candles, even the tiny ones, are like 10 points. It's very hard to trade stuff like that because you have to increase your risk. And even if you just went down to one contract, if you're wrong and your stop loss is huge, you're still going to take a big hit. So it was definitely a day where you had to be extra cautious. And in my case, I didn't trust my read enough to take too many ambitious trades, especially considering I had to keep the stop losses huge, that I ended up just kind of watching and then just watching and just trying not to get FOMO and jump into something foolish. The price was moving down on this yellow down channel. It broke out. Looked like it was a spike in a channel up this orange channel. It was looked like at this point in real time, looked like it was range bound. It was actually where I took my first trade. It was an overshoot on this orange up channel, and these candles look like they're tiny. But if you even look at this guy, this is like an 8-point candle. Pushes up, creates a new high, it pushes down. It's a first entry long, pullback. It creates a second entry long here. Second entry long, this is a bad signal bar, so I wasn't ready to take a trade right here. When it came back, it didn't break below this micro triple test, but I still call it first entry, second entry. I decided when it closed up here, I entered pretty much right at the highs for a quick 1-point scalp, but look at the risk I had. This is a 10-point candle, so I'd have to keep my stop loss way down here. So when I entered, I actually didn't have time to drag my stop, and I was lucky because during the formation of this, it could easily flush down, hit my stop, and then continue upwards. So it was a very dangerous game. I was able to get profitable, but it wasn't an easy to manage emotionally type of trade. So I do realize this wasn't the best setup to try to take, especially considering the huge risk, but I was able to get it. And it kind of chops around, moves sideways, and it starts moving up and out of this pre-market range. This is kind of right around when the announcement and the rumor popped up that maybe Trump is going to have a pause for 90 days. So it kind of bounces. It doesn't come back to the EMA. So I'm looking for anything like a bulletproof setup right at the EMA. Pushes up. It kind of almost touches, continues upwards. I find this yellow up channel, which fits semi-well. There's a small overshoot here. You could actually include it just because it never broke out to the other side. Pushes up, hits this consolidation, and it flushes down. Break of this green down channel, tests the low, and now it's moving down this yellow down channel. And at one time I did have something like this, but didn't really fit very clean. So I was pretty much sitting on my hands, and this yellow down channel was drawn a little bit after the fact. So I couldn't use it as a key entry point for any particular trade. Pushes down, first entry shift, second entry. It's the first break of the EMA, but there's no clean setup. The prices are continue moving down. It's just very, very volatile. Even this seemingly small candle here, this is a 9-point candle, so it's very deceiving. It pushes up, flushes down, it creates a new high. It's a first entry long. Technically, you have a second entry long here, but when the candles are so huge, you need something very deliberate, like first entry. You include all this as part of the leg down. This is the second entry long, in my opinion, but it's below the EMA. Also a new low here. It's a first entry short, pull back, creates a second entry short. I marked this as I considered it in real time because it looked like it was falling nicely in this orange down channel. Broke out and then closed below. The problem was I was thinking of going short until it engulfed and it kept going. So once it closed here, I felt like it was too late to try to take this trade. So definitely the short would have been on the engulfing here, but I wasn't ready, especially when like this candle is 21.25 points, which is huge. So even if you want to take this trade, your stop, because this is still forming, would actually be way up here. So that's going to add a few more points to that. Prices move down. It breaks out of this orange down channel, tests the low. Technically, it's a new low here. Created a first entry short, pullback, second entry short. But I actually did a count reset because I said this is kind of a localized group bottom. So I said actually first entry short, pull back up, second entry short. And it was a second entry short, what I considered a triple test EMA holding resistance down, This yellow down channel technically has almost tested low, depending on how you drew it. You could say it tested low or not, but I thought this is rather bearish. It might have enough for a quick momentum push back down. So I entered one tick below. This is still a large risk because this is 13.25 points. My stop was actually above here. So going for a 1 point scalp is like the risk reward, it doesn't make sense. I understand that. I should go for more, but I was also wanting to minimize the length of time I was in the trade. So it does minimize it by reducing your scalp profit target, but it is introducing a very negative risk reward. But I was willing to do that just to, be able to play and not get super anxious because ideally for something like this, you should probably go for 2, 3, maybe even 4 points. But you don't know that it's going to do that because these candles are huge. Volatility is high. This thing reverses on a dime. Plus, this doesn't make a clean move from up to down. In here, it's chopping and just oscillating wildly during this whole time in a lot of these candles. So it makes it very difficult to trade. After the second profitable trade, I decided, okay, you know what? It's early in the day. I'm up green. I don't want to continue risking something like this on such a day where announcements are just coming out left and right. A bunch of countries are unhappy. A bunch of people are unhappy. The administration, the Trump administration is announcing things kind of unscheduled, kind of tweeting and saying things. So it causes a lot of things to be taken the wrong way, just crazy. So then it pushes up. Again, you're going to find a lot of second entries. I'm not going to really go through the effort of going through each single bar because it's going to take forever. I will say that I noticed this is a new low. It's a first entry short pullback, second entry short. It's a break of this orange up channel. Technically, it tested the high here, but something about this made me think there might have been a long, especially I was pressing up and through here. But it's hindsight's 2020. If I knew it was going to do, well, if anybody knew it was going to do this, they would have taken a trade. But I had a hunch about this trade, but I really couldn't justify it other than seeing a failed second entry short. Prices then continue moving up. This is the first time it comes down to test the EMA in a while. So it's like a first entry long, pullback, second entry long. It's not a good signal bar to go long on. And then you don't really get a higher low confirmation. It's just two sideways. Prices look like they're moving up this channel, but it wasn't very easy to play or use as a key entry point. Moves down on this orange down channel. Looks like it's one leg because you could say it's a one big leg down, but I also saw it as a first entry pullback. Technically, by the count, you have a second entry, but you have to look at a bigger visual because these candles are huge. This is already a 16-point candle, this guy right here. Like first entry, pullback, second entry, and it just kept going. I forgot to change my cursor. Change this to, makes it a little easier to see. It creates a new low, say first entry short, pullback, second entry short. It's also a new high, first entry long, second entry long. There's a couple things I don't really quite like about this trade. This is an overshoot here, so you're expecting a potential overshoot on this side. So with trend, it's already bullish, but it's difficult and risky to take the first, second entry with trend after there's an overshoot because it could create a corresponding side on this side. So I need a higher low. So first entry, second entry, saw it, but I wanted a higher low more decisively above the EMA, but you don't really quite get that. Technically, this one is this red candle is slightly lower than this, but it's very subtle. Plus it closes a red candle, but it closes a green that I'd say first entry, second entry with a higher low here. Unfortunately, it didn't quite do that. And again, I was just happy with my two quick trades that I just didn't really want to risk anything. Then it just gets really noisy. I mean, there are second entries, as I said, in here, and it's just hard to trade because these candles are huge. So first entry short, second entry short right here. Prices continue moving up. There's no clean setup that I particularly like. There's a first entry long here, pullback. Technically, you have a second entry here, but it's below the EMA. Prices are kind of looking like they're reversing. This is a decent setup that I actually saw. I saw it's a new low here, break of this yellow down channel. Looks like it's two legs up. So it's a first entry short, second entry short. I thought this was a possible trade here. It would have been enough for a 1 point scalp because from here all the way down to here is about 5 points. So you do have enough for a quick scalp. But again, I'm just it's something I saw, didn't really want to take. I did mark it as a possible trade in the notes. It's choppy here. I mean, this candle here is like 23 points. And this isn't even unusual for a day like this. Pushes up, breaks out of this green up channel. makes one attempt up. Actually, you could say it's almost like two attempts for one big push up. I'll say first entry long, then it comes all the way back down below the EMA. EMA itself is a little hard to trust today as a key entry point because, yes, during certain times it's acting as a support, then it's acting as a resistance here. Then it just kind of acts like something that prices aren't particularly respecting. It's either above or below it, and it just jumps around quickly. So it's hard to trust that it's going to act as a resistance or support. So you need a whole lot more key entry points or a cleaner setup to really have the fact that the EMA is going to come in to act as an additional key entry point. Pushes down, and then it does this really wild. This candle here is 32.25 points. And if you look at the timestamp, this happens at 10 o'clock, almost 10 o'clock even, and 12 seconds. This one happens at 10 o'clock and 19 seconds. So 7 seconds later, it forms this gigantic 19-point candle. Then another 8 seconds later, so this is from this candle, 7 seconds, then 8 seconds. It created this huge, huge, huge push up. And in this huge push up, these are gigantic candles, 32, 19, 21. Like how, even if there was a setup here, how do you trust it? Because as I said, these ones did flush up without looking back. But a lot of these other candles, there was a lot of oscillation that was happening. So even if you entered, if you didn't drag your stop loss out quickly, or you didn't start initially with something huge, which is another risk in itself, you could easily get stopped out right after you just entered. So it's just hard to trade, hard to manage risk. Prices move down, then it kind of bounces up. It fits this orange up channel, kind of, but I'm not too excited about it. Then it looked like it was a spike in this ugly orange to yellow up channel. So here I was just doing my best to see if there's a move back to the EMA or a key entry point or a bounce off this support that you could take a trade off of, or at least think there was a trade off of. But they kind of didn't form clean. Lots of wicks on each side. Presses down. Looks like there's 3 attempts down. 1, 2, 3. Then it finally reverses. Like, how do I trade this? I'm not really sure. Also considering the huge risk and the volatility. Pushes back up. Break of these orange up channel pushes back down. Now, I'll admit, up to this point, I was looking as focused as I can, but it is mentally exhausting at this point that I was not as focused or paying attention at this part of the day. And it was just kind of zooming by me. And I'll admit this part isn't marked up as well, just because it was just mentally exhausting at that point to try to keep up with this. And I was affected by the fact that I already had 2 trades in. So it kind of gave me a pass, at least mentally. I said, well, I've done everything I need to do for today. I did 2 trades. I was profitable. You know, it's still good practice to watch this, but after watching it, this crazy price action for the whole day, I was mentally checked out at this point. So that's how come the channels here aren't drawn as well or as clean. And on top of that, it didn't help that the market was just very choppy to really not really encourage you, well, encourage clean lines to be drawn. But I will say, like, yes, there are probably some possibilities in here because I do see one here. So new low, the first entry short pullback, second entry short, but this isn't a good signal bar to even go short on. And you kind of get a higher low here, but you saw this and it doesn't even look like a clean candle because it's kind of neutral and pushes back up. And even toward the close, it just got really choppy. So it was for me, and probably other people were killing it today. And if they are, that's awesome. But for me, it was really challenging, as was pretty much, you know, the previous few days of trading. And I will say, last Friday and Thursday I did trade, but I didn't make any videos. The thing was, on Thursday I got 2 wins and 2 losses. Friday I also got 2 wins and 2 losses. And my rules are if I got 2 losses not in a row, just 2 losses, I have to stop trading. So on Thursday I won one, lost one, and then I lost it again. And it all kind of happened at the end where I think I was probably sitting for too long, decided to take a trade. The same thing happened on Friday. I took 4 trades. I won the first one, lost the second one, won the third one, and then lost on the fourth one. And again, those are 2 losses that I just had to stop trading. So today, when I was already up 2, I didn't want to tempt fate, just kind of slowly grind that money back that I lost. So it was, yeah, price action like this with so much volatility and volume, I'm not particularly used to. It made it very challenging and a very difficult day for me. So hopefully that was helpful.